Well, hello. My name's Justin Lewis, and I'm a futures and options broker. One of the things we get asked a lot about is the being with the futures and options market is other financial topics, and I want to talk a little bit about just an opinion on Gamestop and AMC and others that are getting so much media attention over the last couple of trading days. Of course, everybody's got big opinions, and everybody just loves the idea of the whole get rich quick scheme and ways to easily make money. Well, historically speaking, it's really never that easy. But I just want to provide a few random thoughts on all of these stocks and what it means to me. I have nothing to do with the stock market professionally. I've just been dabbling and learning about it for most of my life anyway. So I have some what I feel like are pretty important things to share regarding just the stock market in general and how the things work. I personally am a futures broker, so we trade futures, which is very rubber meets the road. We typically deal with risk management for farmers, ranchers, oil and gas type of customers, but it's in the futures market, not the stock market. And the two are really completely different. To the public they may not be, but they work completely different. Just like short selling in the stock market is completely different than investing in mutual funds. The futures market is even more so different. So I really don't have anything directly tied to the stock market, other than just my own personal stuff. But I have been around it, have been studying for a very long time. Again, people love this idea of easy money, so everybody jumps on board. The media just loves to hype it up because it generates a lot of attention. Everybody kind of gets sucked in and drawn into it. But the general idea is with the stock market, the price of any asset, including stocks, should be based on the present value of the future cash flows. It's really that simple. It's the present value of whatever future cash flows are expected for that stock. So GameStop, are the future cash flows expected to go up? I haven't done a whole lot of in-depth research on it, but to me it looks like they're losing money. So are they expected to make a whole lot of money, or expected to make a whole lot more money into the future? So has the value of that stock increased because the future cash flows are expecting to go up? Maybe somebody expects them to start making a lot of money. AMC, same thing. They've been losing money. I think I saw that last year they lost $270 million. Does that mean that in the future their stock price will go up? Maybe so. I hope it does. I'm not trying to say that people buying it here are wrong necessarily, because I really don't know. Maybe it will go up. Maybe they will start making money in the future. But the value of that stock is based on the perceived future income, future cash flows of that company. So if I expect let's say a 5% return every year, and the stock's going to pay me a 5% return. Let's say it's $5. Well, that stock should be worth $100 today because it makes $5 every year for my one share. If I expect a $10 return and a 10% return every year, if I pay $100 for that share of stock, it should pay me $10 per year. Right now, it's losing money. So why are all these people jumping on board trying to buy it? I guess they expect it to start making a lot of money in the future. And this present value of future cash flows is kind of like one of the main pillars of finance. And you can apply it to land, businesses, a lot of things. But that present value of future cash flows, you can get on YouTube, Google it, whatever. The price of stock should directly correlate to the future cash flow expectations. Now, maybe like Tesla's never made money, but maybe they expect really big things in the future. Very possible. So sometimes it's not necessarily what's happened. You hear historic past performance is not indicative of future results. Well, maybe the past performance of them losing money means that they've lost a lot of money, but they have something that's very valuable. And I think that would be the case with the Tesla. So the value of any stock, present value of the future cash flows. Now, we all hear on the media, it's going up. It's going up. So we all jump in. I was guilty. I bought some AMC stock. people get in here, they hear it on the news, they have, generally speaking, very little idea of why the stock is going to go up, other than the fact that we're gonna do a short squeeze. Maybe they are, and I'm not knocking the people that have done that, because I'm guilty of it as well. But I also know that, just as a general rule of thumb, over the last 100, I guess, the entire history of the world, it usually comes back to whatever the company's making or losing. So we get in here, we buy this stock, and one of the toughest things I've noticed over the years, and one of the really the worst things that can happen to a new investor, is for them to make a lot of money really easy early in their career. They typically, it doesn't end well, because they think, oh, this is easy. I'm going to trade these stocks. That's all I'm going to do. I made 300% this year. Let's just keep doing it. Well, from my experience, it's very hard to keep that going, and I've never really seen it happen like that. It usually happens where you make a lot of money. Well, you start to think that you're smarter than you really are. The opposite is you lose money. People think you're dumber than you really are. Maybe we're not smarter or dumber. Maybe we're just at the mercy of the market, and the market determines if we're smart or not. But the worst thing that can happen is to make a lot of money early, because then you spend the rest of your life, or your investing life, trying to chase that same thing over and over again. And it's very hard to consistently repeat gains of that magnitude. If you look at the stock market, it's really just a giant voting system, a voting mechanism. Okay, so there's people buying and people selling. Let's say everybody starts out with an equal $100,000 to buy and sell. The people that are better at it continue to accumulate more votes into the future. People that are worse at it lose votes. So as time goes on, the people that are best at it typically accumulate more and more votes. Well, that's how you end up with these massive hedge funds that people hate so much. They've been better at it. Currently, they're short these stock markets. They have all the votes, if you will, on what the price of stock should do, and they think that Gamestop and AMC and others, they're voting that the market will go down because they have the most amount of votes. Well, this interesting things happening here is this group, this Reddit, group think. They get together, combine their forces. There are all sorts of opinions on the legal matters behind it. I don't personally know all the legal, the pump and dump schemes that everybody talks about. We watched that movie Wolf of Wall Street, and the pump and dump and all that. Maybe this is just modern day that. I don't know. But they have a lot of power, and they've proven that. And now you've got these people that have all these votes, losing votes, back to the general public, which is kind of spawned out of this Reddit message board. That's great. I'm all for it. I just know that in the long run, probably the large hedge funds will probably they may change names, they may change ownership, etc. But probably have a lot more experience and thought. Hundreds of years of experience backing it up. And this is one thing that they maybe have screwed up on big time, and maybe there will be more in the future. But this giant voting mechanism, the people that are good at it get more votes. That's why those hedge funds are where they are, is because they've got a lot of votes. Another thing I want to talk about is the efficient market hypothesis. The efficient market hypothesis basically says that the current value of any asset, in this case stocks, the present value of any stock reflects all of the information in that market. All of the information. Now, there's different forms of efficient market hypothesis, but this idea goes back to a guy named Eugene Fama at the University of Chicago, and he had this idea that markets are always going to be efficient because everybody knows all the information. There's some argument that it's even more so now because you have Reddit, you have Twitters. All the information in the market is reflected in the value of that stock. So that's the efficient market hypothesis in Eugene Fama. The problem with his theory is that you have bubbles. And you can go back, the tulip bubble in the 1600s, the dot-com in the 90s that ended in 2001 or so, the housing bubble in 2008 or 9, and so on. If prices are efficient, then you wouldn't have bubbles. And I don't know that the current AMC and GameStop is a bubble, but it kind of makes you think in that direction, just because prices have gone up without any real fundamental backing, and these bubbles typically cause people to start acting irrational. For example, in the housing bubble, the housing prices kept going up. Well, people kept going out and borrow money on their newfound equity and buying more houses, and it's just kind of a self-feeding deal. Well, at the end of the day, you run out of buyers, and there's nobody left to buy, and now everybody's a seller. Well, that pops that bubble, and the market comes back down, and you look in hindsight, you look at it, and it seems really, really obvious what should have happened. But we get carried away and we get caught up in it, and I think right now there could be some instances of that going on in the stock market. I see today silver's up about $2 right now. It's almost $29 an ounce in March, silver futures. People are carried away. They saw it on Reddit. Let's buy silver. Drives the price of silver up. I'm all for it, but I also know that a little bit of reality is needed. Another thing that I want to talk about a little bit is all these trading platforms. This is Robinhood's website. I'm not knocking Robinhood, but do you really think that there's no commission? It's commission-free investing, it says. Do you really think it's commission-free? So how would they make money if it was commission-free? Well, Robinhood invented this. I don't know if they invented it, but they're one of kind of the first mainstream people to do fractional shares. So if I have $10 and I want to buy Tesla, I can buy like 1% of a Tesla share. Well, what they're doing, and I am not an expert on Robinhood by any stretch of the means, but it's not free. I suspect that they're making their money either on the bid-ask spread. For example, let's say Tesla's trading at $800 a share. You're buying your one fraction of a percent at $810 a share. They turn around and buy it at $800. They sell it to you for $810, and it's just 1/100th of a percentage, let's say. But little bit like that, you may not realize you're paying commission, but you are paying commission. Otherwise, how else would they do it? So you got to be careful about that. And I'm all for Robinhood. Like, I'm not knocking it at all. But these fractional shares idea, I just don't know. Just be careful when it says it's free. I have a really hard time believing that. And there's other stock platforms. I mean, pretty much all of them say they're either $1 or less or free commissions. It's just hard to believe that that's exactly how that's working. Another factor that we're seeing in today's time is inflation or money printing or government intervention in all these different markets. Government has a more important role to play all the time. All right, so a lot of people mad at Robinhood shut down. I don't know why they shut it down. I just know that the government intervention is a big time problem. I won't get into it, but the cryptocurrencies, that seems to be something right now that is a very popular topic. I've stayed out of the cryptocurrencies, and every time, and I've stayed out of it. I've probably missed the boat too. I'll say that. But every time I ask somebody or I read about it online, it's actually more confusing than the previous time. So every time I read it, I feel like I know less. And so I ask people that are supposedly experts at crypto what they think, and I can tell that they don't know what they're talking about either. So I have a hard time getting involved in that. I don't really want to talk about it, but I thought I'd mention that. I've been kind of careful and stayed out of it. I saw that India trying to shut it down and create their own cryptocurrency. So I don't know what will happen there, but I could see other countries kind of doing the same thing. So not knocking Robinhood. I'm not knocking the Reddit trade. I think it's a great idea. I wish there was more of it, actually. But it's activism. Stock activism that probably helps the whole overall stock market as a whole to have people interested in it. Great. I hope it works. I'm just a little bit skeptical at this point. So what does work? If that doesn't work, what does work? Well, the age-old things, you've got these exchange-traded funds. That's another one they're going after. They're going after the silver ETF right now. They're buying it. But exchange-traded funds, the benefit of it is if you're a smaller investor and you don't have the time or know-how to spend learning about your investments, and what to invest in, and where to put your money, you can invest in an ETF. Maybe you like the oil business and you don't want to study each oil company. There's oil company ETFs. There's ETFs that just follow the S&P 500. Well, that's 500 of the biggest companies. Really easy way to invest without having to know a lot about it. The cool thing about the S&P 500 is your S&P 500 ETF has very low expenses, almost nothing. It's like 0.05% or something like that. Very low expense ratios. If you buy the S&P 500, it's the 500 biggest companies. If a company does bad, what do to it? They kick it out and replace it with one that's doing good. So generally speaking, over your investing life, investing in the S&P 500 is going to give you the 500 biggest companies, which are always coming in and out of it, changing. So I would say that index funds, which is kind of what I'm talking about with low expenses, are probably for the average person, probably the best place, just based on how much it costs you, the fees, what you get for your money, and you don't have to spend a whole lot of time. You just have to persistently invest in it over time. So again, none of this stuff has anything to do with what I do for a living or anything. People keep asking about Gamestop and others, and what's going on in the markets, and I do know a little bit about it, but I'm really not an expert on the stock market either, but just a few random ideas. I'm going to put this last on here. So futures and options trading involves substantial risk of loss. It may not be suitable for all investors. Carefully consider whether futures trading is suitable for you in light of your financial